Hello, I'm Robin. I'm a certified financial planner, certified private wealth advisor, wealth manager by trade, and your rich auntie. Today I'm talking about divorce, specifically gray divorce. I received a comment from a viewer asking about the role of divorce in retirement. I took the opportunity to look around YouTube and realized there wasn't a whole lot of content about gray divorce and retirement. So, what is gray divorce? Gray divorce is a divorce that happens later in life. It can happen in your 50s, 60s, 70s, 80s, or beyond, but typically it's a divorce that happens later in life. I'm also going to use this opportunity to talk about marriage and what I see as a financial advisor. So, let's get into it. 100% of divorces start with a marriage. And I have had the great fortune of meeting a lot of clients when they're single, getting to know them when they meet their significant others, and establishing the relationship with them and their significant others going forward. I've also met people when they were single, they subsequently got married, but I've never met their spouse and they choose to keep their finances separate. There's a few things when people are getting together or seriously dating or considering getting married that I think works really well. First things first, I really advise get premarital counseling. Premarital counseling can head off a lot of problems and can build points of consensus. It's also a lot of times people don't talk about deeply held values and beliefs and they come out in marriage, and sometimes it's really difficult to negotiate with those deeply held beliefs and values at those points. They could be anything from money, religion, children and child rearing, where you want to live, career, family, etc. A good premarital counselor will help you really negotiate those difficult talking points and come to a point of consensus. I would say probably of the clients that did it, maybe 1 out of 8 subsequently decided not to get married after premarital counseling. It's really helpful in discussing things and coming to points of consensus and how to build your life together. So I strongly advise, if you're considering getting married, seek out premarital counseling before you say I do. The second thing is you need to decide with your partner beforehand how you're going to handle money. Oftentimes, you'd be surprised, very few people actually talk about this, and then things get messy in a marriage. Are you going to have your own account? Is he going to have his own account and there's going to be a joint account, or there's just a joint account? Who's going to make decisions about money and pay the bills? Usually couples nowadays are doing it where both the husband and the wife are paying bills. It works for some couples, but that's also a good way for having things drop. I really strongly suggest one person takes in and pays the bills, not necessarily from their own account and their own money. It could be from the joint account and the joint money, but one person has that task and has that responsibility. Lest if you have two people doing it, bills drop, things are forgotten. It's not quite clear, like, did you pay the water bill this month or didn't you? And suddenly the water is cut off. Did you pay the light bill or didn't you? And suddenly the lights are not on anymore. There's a huge underpayment or non-payment fee. Typically, having one person handle the household bills make things a lot cleaner. But however you decide to handle your finances, that really needs to be decided long before you say I do. I'm a huge fan of prenuptial agreements, and people have mixed thoughts about these, but prenuptial agreement, it's good to negotiate everything while everybody's on good terms. And before a marriage, everybody is in love and wants the best for themselves and their partners. And people are at least willing to speak candidly and in a positive regard about their partner and about money. Now, if you don't want to do a prenuptial agreement for any reason, the second best thing I would say is speak to a family law specialist, speak to a family lawyer, right? Because I think a lot of people get married, especially here in California or in any of the other 49 states, and they're signing one of the most important legal and social contracts of their entire life. And very, very rarely do they really understand what they are signing and what they are agreeing to. People will come back years later and, things are not going well in the marriage. And they're like, I'm thinking about separating or divorcing. And it's like, well, they learn a new fact about their money or separation or divorce, and they're like, I had no idea about that. Well, if you had gotten a prenuptial agreement, or if you had spoken to a family law specialist before you got married, you would have understood of marriage in the state of California or in the state of Florida or in the state of wherever you are. So I strongly suggest getting a prenuptial agreement to decide on premarital assets. I also say you really should speak to a family law specialist to understand what you're agreeing to. If you do not have a written prenuptial agreement, basically you get the state standard prenuptial agreement, which may or may not be in your favor or may not be in your intention. But I'm a huge fan of prenuptial agreements, and I'm a huge fan of having couples go speak to a family law specialist so they can really understand what they are agreeing to in getting married. The next thing, and people never do this, but it is critical, and I've seen it really, really mess people up at the point of separation or divorce. Print out all financial statements for your accounts the month before you were legally wed and the month that you are legally wed. It's very important that you do this because, for example, let's say the 35-year-old that has $500,000 in his retirement account on the day of his wedding. That $500,000 was obtained when he was single, right? Everything else above and beyond that $500,000 could be considered a marital asset. But if you can't prove that $500,000 was yours when you were single and you acquired that when you were single, if you divorce, that might be caught up in the divorce agreement. I have clients who are at the point of divorce and they've been married for a considerable amount of time and they're asking about their account balance 15 years ago, or they're asking for a statement from 20 years ago, even before the age of digital records, and those people are just out of luck. We cannot find the documentation to prove what the account balance was on the date of their marriage. So this is critically important. No one does it. I don't know why people do not do it. They don't think it's going to happen until it does happen. But if you are getting married, the month you are getting married, make sure you print out that statement and you keep that statement and you keep that account balance in an accessible place in case you do separate or divorce, so you can prove what was premarital and what was a post-marital asset. If you don't know the person well, and we live in the age 50, 60, 70 years ago, generations ago, you knew the person on some level you were marrying. There were very few opportunities to really meet strangers in your life. We were part of social clubs. You were part of the knitting club or the church club or the bowling league or Rotary or different organizations. And odds are you knew the family of the person you were marrying. This was important because it gave you context about the person. You knew the person's upbringing, you knew the person's background. You could easily do background checks on the person and find out through the community who this individual really was. Very, very seldom did total strangers marry. Now, in the day and age, the digital day and age, a lot of people meet their partners online. Some people meet through jobs, friends, or other sources. My point in telling you this is that there's less of a context in which to really know or evaluate a person. Okay. People can mask and hide who they are for a long period of time to get what they want. Oftentimes when we're in love, we ignore things or we ignore signs. I have had clients in situations before where things just didn't add up about the person. There were some key material facts that didn't really make sense. The timeline that they gave didn't add up. They had met this person online and this person was moving fast towards marriage or moving in together. I really strongly suggest, if you have the means to do it, in some cases, you look at hiring a private investigator to look at a spouse, especially if you haven't known this person a particularly long time. If you're marrying someone after 6 months, and I have seen quick marriages, and some of them, it's just you meet the person and and it's good and you go forward. But you want to be able to verify that this person is who they are claiming to be. and that their story lines up. So I have had clients who have hired private investigators to look into potential spouse's background. Usually it comes back, everything is as it should be. Sometimes there's a surprise that comes back. Sometimes there's a surprise. So, marriage is one of the most important decisions you will make, both emotional and financial, in your entire life. And you want to make sure that you are marrying who you think you are marrying. If there is any doubt and you can't verify part of someone's story, or you can't verify large portions of people's story, put out a couple of $1,000, hire a private investigator, and have it looked into before you say I do. Next thing I would say about marriage, pay attention to how a person handles money before you get married, because odds are it's going to be amplified after marriage. For example, if you have, I have clients and they've dated someone long term, and the person that they've dated and considering marrying has a very spotty work history, or doesn't have a history of keeping jobs very long, or has been fired from a number of jobs. You want to pay close attention to that, because sometimes people just meet with a difficult period of time in their career, but sometimes it tells you that that person has a troubled connection with work, and that's going to cause friction and a problem in a marriage. So pay attention to a person's work history. Make sure it makes sense. There's a saying that you should avoid the unfortunate. And this really plays true in terms of people's work history. If someone doesn't have a strong work history and it is a reoccurring theme in their lives, you really want to take that seriously, because it's going to show up again in the marriage. And I definitely have had clients who basically the divorce was predicated on the fact that their spouse or their partner would never work or didn't hold a steady work history. So next is during a marriage. What I would tell people during the marriage, if you say you're not going to commingle, don't commingle. This comes into big effect with inheritances. So let's say the husband inherits $1 million from great Uncle Joey. He puts it in a joint banking account and goes on to divorce. It's a joint asset because it's in a joint banking account. If he put that money into an individual bank account in his name, he could walk away with that money scot-free because it's an inheritance. I always tell people this when they come into inheritance. Do you want to put it in a single account? Do you want to put it in a joint account? If you put it in a joint account, it's a joint asset. If you're not going to commingle, don't commingle assets, because once assets are commingled, it's pretty much impossible in the eyes of the law to separate them. If you have an inheritance or you have a premarital asset that you want to keep separate, make sure that you keep all documentation that that asset is separate and never commingle those accounts. Talk about money with your spouse. I have a number of clients who have no idea what their husbands or wives or spouse, significant others earn, aren't too clear on the details of their work, have no idea what investments accounts they have. And I understand that different couples have different communication style, but this becomes a huge problem in the event of divorce or death. If you don't really know much about the details of your husband's job and he suddenly dies, does he even have a life insurance policy? Were you the beneficiary of that life insurance policy? Where are his investments? Does he have any investments? Does he have a crypto account? If you die, he may not know anything about your account. So I understand that couples have different communication style, but it really is very important that you know what your significant other has and what they're doing, and they know what you have and what you are doing. So let's get to the concept of divorce, and this particular in grade divorce. I typically tell people who are considering divorce, the sooner you can divorce, the better. If you can divorce in your 20s or 30s, you can recover and move on. Once you get into your 40s, 50s, 60s, 70s, 80s, and beyond, it becomes more difficult because you have more assets in common, you have children, you have community property, you have other things that need to factor in to potentially a split or divorce. So, if you're having difficulty with the spouse and you're deciding whether to take them back or whether to divorce, I always tell people choose wisely, because you may just be kicking the can up the road for another 5 or 10 years and then divorce, and then you're much more financially intertwined with the person. The person may be eligible for alimony at that point. The person, you may be past the 10-year mark at that point and be eligible for Social Security based on your spousal earnings. There's just a lot of things that can change with time. So if you're less than 10 years and you're considering divorce, choose wisely, because you don't want to kick the can up the road and end up divorcing 5 years later. First things first is you need to know where all the accounts are. I'm shocked how many people come to me and tell me they're separating and divorcing and they have no idea where their spouse's accounts are, what they own, what they're doing, and haven't known for decades. This is a big problem. This is a huge problem, because people can hide stuff, people can dispose of accounts, people can move stuff around. I've had situations where clients have had to hire forensic accountants to find all their spouse's accounts, because as soon as the spouse knows that there is a divorce, they begin moving assets out of the country or different accounts to try to affect the divorce proceedings. So I say at any given point in time, on any given day, you should know what your spouse has and what they are doing. This is to protect you in the event of divorce, and this is to protect you in the event of an untimely death. If you're going to divorce. I've also had cases with clients with basically long-term separation. I've had clients who were separated up to 30 years from their spouse. And this is a really dangerous situation, because you are technically still legally married to this person. If this person gets involved in a lawsuit, has a major car accident, is sued for liability, you are automatically drawn into it because you are the person's significant other, spouse or husband. Basically, in these long-term separations, you are still fiscally bound to this person, but you don't really have much contact or connection with this person. I'm not a fan of these long-term separations. I understand people separate for 6 months, a year, 2 years, and then get back together. But, these indefinite periods of separation where people are out there, living basically completely separate lives, but they're legally married on paper. Sometimes there's a legit reason to do that, and I won't get into that. But in most cases, it's exposing you to a huge liability of what you or your partner may do when you're not around, and you may be on the hook for it. The next thing in a great divorce, just make peace with the fact that it's going to reset your retirement to some extent. Now, how things are divided out, the financial advisor will not be able to tell you. That's more of a family law, judge, court, or mediation thing. Typically, retirement accounts are somehow split. Typically, pensions are split somehow. Sometimes people don't split, and it's just you walk out what you walk in with. And those are typically marriages that are shorter term. But when you are in your 50s or 60s or 70s or even 80s and you've been married 30, 40, 50 years, people typically don't see it that way. And there's more of an odds that your retirement accounts, whether it's a 401k or IRA, will be split. And if it is split, you're basically starting over with half the amount of money that you have. And referring earlier to what I said in getting married, if you can establish basis, like you could say, hey, married you when I was 35, $500,000 in that account was mine the day that we said I do. I want that taken off the table in the divorce proceedings. If you can prove it as conclusive, I think it could be considered. But most people don't have that document, so the account just gets split in half. But you basically go from retirement in joint to retirement as a single person. And retirement as a single person is quite difficult. It requires a lot of hard work and heavy lifting to get an amount of money in your retirement accounts that you can live comfortably as a single individual on in retirement. So 50s, 60s, 70s, it's going to reset your retirement, and it's going to require a whole new retirement plan for you. Post-divorce, I have to remind clients to do this. Immediately after the divorce is settled, you have to change all your beneficiaries on your accounts. You also have to create new estate documents as quickly as possible. I have had situations where people have died and they were married. And we go to the $1 million life insurance policy, and the ex-wife is on the $1 million life insurance policy because the individual never updated the beneficiary on their policy. And situations like that are messy because there's no way that the ex-wife is going to give up $1 million or even can give up $1 million. So someone that person did not intend got the benefit of that life insurance policy because they couldn't take 15 minutes one Saturday, go on the life insurance policy website and change the beneficiaries to that life insurance policy. So all estate plans, advanced healthcare directives, or guardianship documents for children, TOD, transfer on death for banks and for retirement accounts, and living revocable trusts need to be changed very quickly. Do not linger on that. It should not take years to get that done. Do that within the first 6 months of the divorce being finalized. I'm not advocating for staying in a bad marriage for the sake of finances. I have had client situations where people have stayed in bad marriages for the sake of finances and no one benefits from that situation. But the longer you stay, the odds are that you're going to have to pay alimony, and also that it's going to be a bigger hit and you're going to have less time to recover from that divorce. So anytime someone comes to me and they're saying they're considering a separation, if you're going to divorce, divorce. Don't kick the can up the road another 5 years. You don't want to invest another 5 years into a failed relationship and also financially tie yourself to this person for another 5 years. If you want to divorce, go ahead and divorce. Another thing that I would say, if you've been married for 10 years or longer, you can file spousal benefits on Social Security. You may have a greater chance of alimony and a few other benefits. So people typically try to hold into it for 10 years. 10 years are typically very challenging times for a marriage because by that time, you've been together for a long time. You probably have a kid or two. Life has come at you. You're in the thick of it. And I think years 7, 8, 9, 10, 11, 12 are difficult for a lot of people. I've had a lot of conversations with people around year 10 that were considering separation, and they wanted to transition out of that marriage before years 10 because they wanted to take the issue of alimony off the table. Now, you could be married shorter and get alimony. You could avoid the whole issue of alimony by simply signing a prenuptial agreement where alimony is not granted to either partner. But when you don't have documentation in place denying alimony, or, it could be a consideration. It is a consideration for some people who are meeting a major milestone and maybe the marriage is not going the way that they thought the marriage would, and they would be the partner paying the other partner alimony. Finally, what I would say, people considering a grade divorce, be very careful of second marriages. I do have some clients who divorce in their 50s, 60s, and 70s who are like, I will never marry again. I could have a significant relationship with someone, but marriage is just not on the table. And then I do have people who divorce and then within a few years they do get married again. The reason why I say be very careful with second marriages is because there's often children from the first marriage and there's often inheritance considerations. You get married a second time and you die and you have a home. Well, the home goes to the spouse. The home doesn't necessarily go to the children. And if your spouse dies and the home is left, that home may go to his children. I've seen some really wonky, unintended things happen because of second marriages. If you do get yourself into a second marriage, make sure that you have estate documents put into place to protect yourself, your children, your family, and your interests. And make sure that when you die or become disabled, your assets are distributed to the people that you want to have it distributed to. So there you have it. Grade divorce, marriage, second marriages, and what you should do during marriage. Tell me what you like. Tell me what you don't like. If you found this information useful, please like, please share, and please subscribe.